There we go, we're live.
My name is Nick. I'm a full-time trader and entrepreneur. Great. Well, welcome to the stream.
Having me back, Nick.
Thanks so much for taking the time.
Good morning. Good morning. We're doing great.
All right, guys. So we are back in CAD Swiss.
So here's GBP USD.
Just sort of break down the trade.
Hey, keep it brief for I'm only trading for 2 or 3 hours.
I will not disappoint you, my friends.
Hey guys, thank you so much for tuning in. I just thought I'd give you guys just a little intro with what I do as like a little day to day. So yeah, I'm just coming on. Today is Tuesday, the 8th of June, 2021. And today I'm literally just going to do sort of like a day in the life of how I go about trading day to day. So if you've got any questions, pop them in the chat box as well. More than happy to answer whatever you've got coming my way. Okay, so today I've got a fairly small watch list. So I've got 5 key pairs that I was looking at today. And I didn't actually trade at all today. And the reason behind that was because nothing sort of stood out for me. So, I mean, don't get me wrong, there was movement today a little bit, and it was a little bit choppy on a few of the pairs there. So there wasn't much to sort of go off today in terms of a trade opportunity. It was a little bit choppy, everything that went higher or lower. There was no sort of entry signals that sort of stood out for me. So yeah, I was more than happy to stay flat today, and I'm glad that I did. So yeah, on my watch list today, I had Euro JPY, Euro AUD, CAD CHF, Euro GBP, and CHF JPY. And the reason behind that was because the liquid 50 was flat the majority of the day on some of the pairs, which I liked. And that's something that I look for when I'm trying to build my watch list in the morning. And my trade session does usually run probably between 6:30 to about 2 o'clock in the afternoon. After that, I don't tend to sort of trade or get involved in the market. But yeah, so I'll go through exactly what my ideas were on each pair. But yeah, like I said, if you've got any questions, feel free to let me know. So, Euro JPY today, as you can see on this pair, I liked how it was long biased. So if we go on the daily time frame, you can see it's in the buy zone again. They've got this continuous bull run from 23rd of April. And that's on the daily time frame. So it is long bias, definitely. Going up on the 4 hour, it was still in the buy zone at the start of the day, but then it did fall into the sell zone a little bit throughout the day. And then I just do a top-down analysis on each pair. And then that also determines the direction of trend throughout the whole pair itself. So just going through, just making sure that it sort of fits my plan. This did qualify for my watch list. Like I said, because of the liquid 50 there, it was completely flat. It does usually look promising for that to come higher. However, I did notice that a lot of wicks were sort of rejecting the top of the Asian range. So the first high of day was acting of like a little bit of a resistance level for the majority of the day, and it did fall lower. However, if I did want to do a counter trend trade, I'd be looking for divergence, and I'd be looking for this to be overbought. But because that isn't the case, there was no sort of entry signal for me there at all. And because it did come lower, it did go against the direction of trend. So there was nothing that presented for me with that, but I was more than happy to sort of watch that throughout the day and just learn exactly what I could have done better, or things that could have gone on with that pair that I wouldn't usually pick up on. So yeah, it's good to always watch, even if I'm not involved. You learn something new every day in this industry anyway. So yeah, constantly learning. Okay. So Euro AUD was quite similar in terms of it didn't really break the Asian range. It was quite choppy again. Wasn't much movement at all, really. It was still in the Asian range for quite a while, until about 10:45, just before New York session opened. So yeah, it wasn't really something that I was looking to get involved in. Even the candlesticks here They are presenting strong bars to the upside. However, the TDI index here isn't showing a strong sort of trend there. Doesn't fit my plan, so it's just easier for me to sort of avoid that completely as well. But yeah, again, still it's got the flat liquid 50 there, and that is something that I look for when I am trading. But yeah, that is the reason why, and I'm just going to sort of map out exactly why it's so important to stick with your plan, and not sort of stray away from that, and how important it is to stay by the book. And by the book I mean your sort of trading plan, because in instances like this where everything's in your favor but it's just that one thing that either doesn't sit right with you or doesn't usually fit with the plan, that alone can cause a loss. So it's just important to stay focused, no matter how sort of greedy you get or how long it's been since you were within a winning trade or any sort of trade at all. I mean, I've not traded for about 2 weeks now. I'm more than happy to stay flat and look for a better opportunity. So there's absolutely nothing wrong with not trading every single day. Don't force a trade if the market isn't telling you to. And today, for myself, the market just wasn't for me, but I'm absolutely happy with that. So let me just move on to the other pair. So we've got CAD CHF. This was one of the pairs that actually moved today, and it was great. It was a great movement. However, again, no entry signal for me that was clear enough for me to get involved. So this was a really good trade idea. Well, it could have been if obviously there was any sort of entry signal. So I'd be looking at entering off the 21 EMA and off the 8 EMA. So it would be looking for a strong shift candle, and it'll be something like this bar here. So that presented, however, the TDI down here, I didn't see it a great fit. So you can see that it isn't those two lines at the top. So the trend line and the RSI, they weren't below the liquid 50, and that's what I look for. And because that wasn't there, and because it was still in the Asian range, that's 2 knocks against my trading plan. And because I don't trade C setups, I only trade B setups and above, it isn't part of my plan. So I'm more than happy to let that ride. The probability of this going lower is very, very small from backtesting. So again, with backtesting, the only thing you'll be able to notice with the market is trends and probability. So from backtesting, you realise that yes, a setup can occur, but is it worth the risk if it's going to happen once, maybe twice out of 10 trades? So yeah, I was more than happy to let it run. But yeah, it isn't something that I would get involved in, but it did run for quite some time. But then there was another entry that could have presented here, and I was really, really vigilant with this because I almost entered at this point at about 12:30. And again, the reason why I didn't get involved was because the trend line and the RSI didn't cross accordingly. So if it was preferably about here, 1:15, where you're seeing that crossover, then I would have got involved. But because that wasn't there, I just didn't see it being necessary for me to sort of get involved and risk my capital. I've seen that happen before, where I've seen everything looking great. So this is a great setup. However, it's just that TDI that put me off completely. So yeah, it was a no for me, unfortunately, with that one. But it did run for quite a while. So just having a look at what the risk reward would be from there. Let's see. So you're probably looking about 3R. That could, yeah. So 3R trade there. But like I said, it doesn't fit with my plan. But it is something that I'm quite confident with, sort of staying put, because it obviously prevents me from making mistakes. So yeah, I'm glad I sort of stayed out on that one. So yeah, that was probably this is probably the best pair that I've seen today. And then we also had this counter trend idea from today as well. So this is Euro GBP, and I did post this on my Instagram. story. So if you do want to keep me updated with me every day, reach out to me on Instagram at Niamh Forex, and you'll be able to see exactly what I do day to day. You'll be able to follow my watch list. You'll be able to see what I look for, and then if you've got any questions, feel free to reach out as well. Okay, so with this trade, this is a different approach to the normal trend trades that I like to trade. So these are called counter trend trades. And the reason behind that is because I'm sort of trading against the trend. So with these trades, they are less probable. So going off my back testing, I've noticed that with these counter trend trades, I'm profiting about 65%. And then 11% losses, and then the rest will be break even. So, I mean, don't get me wrong, it is a profitable strategy, and I'm happy with it. But if I've seen a trending trade over a counter trend trade, then I'd definitely take the opportunity to take the trending trade, just because they are more probable from my back testing. So again, this is why it's so important, guys, for you to go ahead and back test your strategy before you go ahead and go live. Or even when you're going forward test, it's always good to back test, just to sort of save yourself a lot of time, because I've been there. I've been there trying to trade a strategy that I've not put effort into. And don't get me wrong, you get a few winners at the start, but then it does sort of catch up to you, and then you also think, well, why didn't I take the time out of my day to sort of dig deeper? So I mean, just to sort of eliminate you going through that process, I would just recommend back testing. Regardless of how boring it may get, it is definitely worth it. But yeah, following on with this, so with the counter trend trades, I'm more than happy of just forward testing this now, because I've done enough back testing, and I'm more than happy to show you a few back testing stats that I have sort of back tested, just so that you know how I do that. So yeah, I'll go through that with you in a little while as well. But yeah, with this, I was more than happy to sort of watch this go, and it was just an idea, and I would not get involved with this at all. And the reason behind that is because it has 2 knocks against it. So the first knock is the fact that there's no clear direction of trend. So we've got the liquid 50 in the buy zone, which is normal for a counter trend, because it obviously is going against the trend. However, you've got the divergence on top, which 9 times out of 10, if it's bearish divergence, which means that it's overbought on the TDI, and you've got the trend falling on the TDI, and then you've got price rising on the candlesticks, that represents the bearish divergence. So you're looking really for price to fall after this sort of move. And this wasn't the case, and the reason behind that was because there was high impact news involved. So I'd never get into a trade where I feel like high impact news may impact my trades going forward. And don't get me wrong, this was Euro GBP, and it was dollar news that did come out, but dollar news does shake the whole market, not just the US dollar. Because it's that strong, and because it was such high impact news, it did affect the whole market. So I was more than happy to just sort of use this as an idea, and then come back to you guys and just let you know the reasons behind me not taking this as a trade. And another reason was because of this sort of support / resistance zone. So initially, I first boxed this off as sort of like a resistance level, and then I noticed that the wick started rejecting the support. So they started rejecting the lower side of that, and then it started acting as like a support level. So I noticed as well, with an entry candle, if I was to enter, I'd be looking at a larger shift candle. However, this isn't a shift candle, and the reason behind that is because there's no cross of the 8 and the 21 EMA. So because there's no cross, which indicates a direction of a change in direction of trend, which then would mean that it would be bear bias, there was no clear indication that was there, because it did not cross. So if it was going lower, the 8 EMA would cross below the 21 EMA. So the 8 would be the light pink and the 21 would be the dark pink. So you'd be looking at something like this around 5 o'clock this afternoon GMT. So yeah, that is the reason why I wouldn't sort of get involved with this either. But like I said, they are less probable. The shift and entry candle could be way better. And if I was honest, I'd be probably looking to actually get like a breakout entry, sort of out of this region of support / resistance uncertainty, because when you've got wicks rejecting the both sides, it's very hard to get sort of like a clean bias on that. So it's just much easier to just sort of let it ride. But yeah, news definitely did push this higher today. So yeah, more than happy to sort of stay out with that. And my analysis was sort of correct. So you do have news pushing it up, and then after the news was presented, it came back lower. So ideally, the idea was there, but it was just the fact that the news and the shift candle just wasn't present either. So again, that is just another indication as to why you should really stick to your trading plan. So sorry, guys. Is that any better? Just notice that it's really fuzzy for you. Let me know if that's any better for the camera from myself. Okay. So yeah, it's a hot day in Manchester today, hence the weather. Okay, so we will move on to CHF JPY. So this also qualified from my watch list today. Again, it was because of the liquid 50. I really like the fact that it was in the buy zone. And then just checking the higher time frames there, they are bullish as well. So they are in the buy zone. So I was sort of looking for like a trend trade with this pair today, which, I mean, direction of trend was definitely bull bias today. As you can see, it did pull much higher all the way to average daily range, and it did make really nice highs as well. Okay, so I mean, I did have this little level drawn up just in case price was to go lower, just because I did see a few wicks rejecting the upside there. So I sort of put that in place just in case that did come lower, and just for my own judgment, really, just to see if that is something that would push price lower. But it did actually break above that sort of region, and I would be looking for sort of like a breakout of that region, along with the confluence of the EMAs and the TDI. So I really did like this shift candle. However, let me just measure it, because if it's the largest candle of the day, I wouldn't usually get involved because it's the largest candle of day. It's a lot of movement throughout the day, and it's probably the most movement we've had. So usually 9 times out of 10, when you've got the largest candle of the day, you get a little bit of a reduced movement. And that absolutely was, yeah. So that was 8.5 pips, and don't get me wrong, it isn't a large shift candle at all, but it would be for compared to the rest of that day during that time. So that was about 8:30 this morning GMT. And then price did come lower, tested the zone a tiny bit, and then just shot off straight to ADR. So it was a great opportunity. However, again, with the TDI there, I just can't risk trading an opportunity like this when the TDI looks like it isn't in the correct zone. So if it was any earlier, say this region here, if it looked as good as that, where we had the L50 on the bottom, the TDI on top, and the trend line in the middle, then I'd be all over that 100%. And the only knock would be the candle itself being a little bit overextended. So I would grade that a B setup. However, because the TDI isn't where I'd like that to be, then it would have to be a miss from myself. But I mean, the opportunity was there indefinitely. And in actual fact, that didn't actually run 2R. So, I mean, following my rules there, usually if I get to 1.5R, so say this region here, I would look at taking a little bit of profit there. So with it being close to the average daily range as well, I'd probably be closing the majority of it, so preferably about 60%. And then I would leave 40% running. But then as you see in the wick sort of rejecting the upside here, that's when I'd sort of look at closing out the full position. But it didn't actually go the full 2R, and I wouldn't put my stop loss any lower than that wick, just primarily based on those last 3 previous wicks that I've sort of was testing that sort of region there. So I would have rather just sort of not stayed put and sort of got out at this region. And then my sort of final exit would be probably breaking of the 21 EMA over here. So yeah, I mean, don't get me wrong, it isn't something that I'd get involved with, preferably if that candle was a little bit lower, and that those 3 wicks wasn't so when sort of getting involved with the stop loss there, then the risk reward probably would be a lot more worth it. So yeah, isn't something again that I was involved with, and I'm more than happy to stay flat today. So yeah, it was great. But yeah, just because I don't trade doesn't mean that it's not a good trading day. There's always so much to learn when you are trading, and there's always so much to sort of just go back on. And even for research, if you see continuation in patterns, look at your previous setups that you've got. Always keep a log of what you do day to day. So everything that I've gone through today, so Euro JPY, Euro AUD, CAD CHF, Euro GBP, Swiss yen as well. What I'll do is I'll just mark all of these up with my notes just so that they're all updated, and just for sort of feedback purposes for myself, because once a month I do like to sort of look back and with what I've done throughout the month, just so that I can get sort of like a just that I can get like a recap on the month just for my sort of progression. So yeah, it does help just to sort of keep a journal and sort of keep track of your progress and things, because it is just sort of rewarding to go back on that and think, wow, my hard work is definitely paying off. Because when you work so hard and you don't sort of track your progress, you don't realize how much work and how much reward is coming from that. So it is definitely worth sort of journaling your progress throughout your trading journey, and it is something that I really do recommend. So yeah. Okay. So what I'll do next, I'll go ahead and get up a few spreadsheets of my backtesting. And don't get me wrong, it isn't anything magical where I've got statistics falling out my ears. It is very basic, and I just find it useful because it helps me look at what I do day to day, and also it's just for sort of stat purposes. So I mean, I do keep a journal of sort of my trade log throughout the year, and then I've also got like my backtesting log as well. So with my backtesting log, this is primarily just this is just for D2 counter trends on Euro USD. So I wouldn't necessarily look at just Euro USD. I'd look at trading the counter trends on 22 different pairs, but I'm just going to focus on EU because it's quite a common pair that a majority of people do trade, and it's got quite a lot of liquidity there as well. So I'm more than happy to go through that with you and just share some light on how I do back test, just because I have a lot lot of people asking me how do I go about backtesting, because it's easy for someone to sit here and say go and backtest, but when you don't know how to do that and what and how to approach that situation, then it does get difficult. But two guys who I really recommend getting in touch with is Austin Silver FX and Jerome Lampassi FX as well. So they're both, two of those have combined together and they've formed themselves like a backtesting course, and it looks absolutely amazing. I can't wait to get my hands on one. So yeah, they've gone into so much detail about it, and it's really detailed, really thorough. And for a beginner trader as well, it's really handy. And it'll give you such a breakdown of backtesting itself and how important it is. You don't understand how important backtesting is until you become a trader and you do rely on your backtesting results for you to show the profitability going forward. It's really important for you to get as accurate results as possible, because you want them to reflect as much as you would do on the live accounts as well. So I'd really recommend either going on YouTube, researching anything about any sort of backtesting spreadsheets people have out there. There are some ones that you can get hold of publicly, or you can go ahead and get easily one of the best spreadsheets that I've ever seen made by Austin and Jerome there. So yeah, just check their channels out and you'll be able to see exactly what they offer. But it is incredible, and I would definitely recommend doing that. But yeah, let's just go into Euro US dollar 2020, and this was a backtest from the 1st of January 2020 to the 31st of December 2021. So let's have a look. Here we go. So like I said, really basic, guys. Nothing absolutely out of the ordinary. But yeah, does the job for me. So you've just got your date here. So that's just the date of the trade. You've got your risk reward. So usually I do try to aim for 2R to begin with, and then I sort of use specific exit rules. And if there's no exit rules, I just keep the trade going for as long as possible. So that's sort of my approach to the market. So when you'll see 2R, then you'll see 5R, and then you'll see 3R. So I always stick with 2R. That's my safe haven, and then anything over that is just a bonus. So yeah, just to sort of go into a little bit of detail with that for you. How's my screen, guys? I'm so sorry. The weather here is absolutely insane. Okay. Yeah, so you just got your win loss column here. This just pretty much calculates for me my risk reward basically, and my P&L, profit loss. So yeah, it does come in quite handy. And then you've got your position. So if I'm going long or short, just for sort of just for stats really. So probability of me taking longs over shorts, vice versa, things like that. Nothing that I really sort of care much about or think about, but it is also good to sort of notice your specific way of trading, just to get you that little bit more of a sharper edge when it comes to your actual trading approach. So stop loss in pips, take profit. So then obviously that just gives you the indication in pips of the risk reward there. Entry time frame, 9 times out of 10 it is the 15-minute, because I do like entering on the 15-minute. I think the half an hour is a little bit too slow for me. With me being full-time 9 to 5, it is also good to check up on the markets every 15 minutes, half an hour, just to see how that is presenting. But I think entering on the half an hour for me is a little bit too slow, especially if I want to get out the trade by 2-3 o'clock. So yeah, with the entry time frame, I do stick with the 15-minute. The 5-minute is too fast for me currently, and the reason behind that is because I'm not a full-time trader where I can sit here all day every day and just trade and just focus on that. I do also have a full-time job currently, So yeah, this is why I trade the 15-minute, and this is why I've sort of found a system that suits myself because of my current situation. As soon as that changes, 9 times out of 10, so will my trading strategy. I can't wait to go on the 5-minute and the 1-minute because I do love trading those time frames, but it's just finding the need and the time for it at the moment. I'm more than happy to take a step back if it helps me take a step forward. So also just to see if divergence is in favor. So obviously with it being counter trend trades, I always do look for divergence. So on these occasions, divergence has to be in favor. So that is a must with these counter trend trades. And then this is also counter divergence. So say if we're looking to go short, we'd look for bearish divergence. And if we've got bearish divergence, and then we also have bullish divergence where price could reject off the divergence level that presents, preferably underneath, then, or maybe on a higher time frame, there might be counter divergence in the way that may you stray away from taking that short. Then I would notify that and sort of have that as a knock on the setup there. And then just another one as well, just for backtesting purposes, about whether the setup is still in the Asian range or not. So I really do like to see, candlesticks break out of the Asian range. And the reason behind that is because it does show you an indication that that the market's going to be a little bit more. There's going to be a lot more volume in the market. It's going to sort of break that that time frame of the Asian range. Usually you're looking for a breakout of the Asian range about the London to New York session. And the reason behind that, like I said there, it just gives you a little bit more confluence. It just gives you more probability that the market will move today. And we've seen on some of the pairs that I've seen today where the market's been choppy, and because it's not moved and because it's not had much movement and not much volume or liquidity, there's been reduced movement, so it's just been choppy across the board. So yeah, it's really important for you to note. Well, for me to notice whether the Asian range is something that's going to sort of be in the way or not. And I do have that as a knock on my system as well. So if everything's in my favor, but price is still within the Asian range where it's not broken that level at all yet, then I do downgrade the trade to a B setup. So only A and B setup trades is what I get involved with, really. Any more than 2 knocks on a trade isn't something that I want to get involved with at all. Some people may disagree with me. Some people might agree with me. That is just my opinion. So whoever is comfortable with the C setups, that's absolutely fine. But it isn't just that. It just doesn't suit me. Isn't for me. So in terms of the screenshot box, this is just a screenshot of the win or the loss or the break-even trade that I took when backtesting. So let's say we started with the 3rd of Feb. This was a win and it went 5.43R, 8.6 stop loss, fairly good. Nice tight stop loss, not too big, not too small. And then we've got 46.7 take profit. So 47 pips, that's good risk reward, brilliant risk reward. Especially if I do usually look just to go 2R. These trades are less probable, less likely to happen. But when they do happen, it is really, really rewarding. Especially when they just drop out of nowhere. So I'll just give you a little example of a successful counter trend trade that I do look for. So let me just quickly switch the screen over for you. Let's have a look. Okay, so this one here. Right, so this is the one from the 3rd of Feb 2020, and I just want to give you a counter trend setup for you to look at. So it's bull bias. So the direction of trend is looking to go higher, looking at the liquid 50 here. However, it is falling. So when you do have a fall in liquid 50, there is more of a probability that price will follow and come lower. And there is bearish divergence from the previous day there that is present there. So that is something that's added confluence that it might go lower. So price was falling throughout the Asian range. So you can see here, price was just sort of descending throughout, and then it sort of slowed down just before London open. And it was still in the Asian range at point of entry. So it would have been a B setup, this would have been. There's room for risk reward. There was definitely room for risk reward past the daily pivot, and that is one of the areas where I look for risk reward with these counter trend trades. So the TDI was great. So you had the crossing trend line in the RSI there, and then you had the liquid 50 on the bottom. So that indicated to me that it was a good entry signal. There was risk reward there, and the divergence was in favor, and even price was as well. So you can see there in the Asian range, it is creeping towards the low of day there, back about 3 a.m. in the morning. So with it being close to that direction of trend as well, that's also an added probability. I mean, it is still in the Asian range, which still does take it a knockdown, but it is still present and it is still there. So yeah, I was happy with this setup that did present on that one. So this is basically just a log of everything back tested, Euro US dollar 2020, and it is just looking for those counter trend moves. So looking for the change in direction of trend. So don't get me wrong, with these trades, they do occur less frequently as well. So on this trade alone, Euro US dollar, throughout the whole year, it only presented 18 trades. So 18 trades, 18 trades doesn't seem like a lot. However, if you take into consideration how many pairs I trade, which is 21 different pairs across the board, and if you look at an average of 15 trades per year presenting on each pair, so let's say 15 trades times 20 pairs, you're looking at 300 trade opportunities over a year. So that's like a trade a day, and then you have a week off. So there's a lot of opportunity to go there. There's a lot for you to see, and there's a lot for you to sort of take advantage of with this sort of approach. And I mean, this strategy is just to sort of suit my needs and suit what I look for. And don't get me wrong, it isn't going to be for everybody, but like I've just proven to you there, once you find your niche and once you find your sort of soft spot and your need of finding a profitable system, and you sort of find things start clicking in your favor, it's quite rewarding, because you've gone so long trying to figure out all the different bits and pieces. And even when you try and reach out to different courses and different mentors, there's so many different mentors out there, and don't get me wrong, not all of them are helpful. You do have to go through hoops and boundaries to find the one that suits you. So yeah, I can't thank my community enough. ASFX have been amazing, and I do love everybody that's part of that community as well. Everyone's so welcoming. But yeah, when it comes to trading, it's about going through different trading strategies, finding what suits you. I went through a rut of a losing streak. I think it was about 7 to 8 months after me starting. And I think every trader does do that, and I think it's normal for that to happen. So for you to sort of stray away from that and be able to go ahead and take that into consideration, be able to put as much work in as possible. Risk reward will follow. You just need to put the work in, and I have proven that to you guys as well. So there's nothing else for me to share other than for me to just sort of talk my views and what I've sort of experienced so far in my trading journey. Don't get me wrong, I'm so new, so new. And there's very, very much to learn, and this fly just keeps flying around near me, so I'm so sorry, guys. But yeah, I've just came on today, and I'm literally just catching up with all of the comments because I've been speaking for so long. Let's see what everybody's saying. Okay, sorry about the camera, guys. It's this lighting, it's absolutely insane. Like every 2 minutes the sun started sunsetting behind me each time. Okay, so hey, ASFX streaming, and I like that. But yeah, really, really appreciate everybody getting involved and everybody sort of tuning in today. If you've got any questions, feel free to reach out to me for Niamh Forex. There's not much for me to go through now, guys, because there wasn't much that I was involved in. But I'm more than happy to stay flat today. And like I've said before, there's nothing wrong with staying flat throughout the day. Trading every day to me is a bad indication. Either you've got an amazing strategy and you need to tell us your secrets, or either you're gonna go through a path of failure. And I have done that. And just to sort of avoid you going down that same path, I really, really recommend you sort of take on the advice and go from there. So has anybody got any questions just before I sort of wrap this up and call it a night? Anybody got any questions? Or afternoon, wherever you are? Okay, so BTC US. Okay, so Bitcoin, any ideas? Bitcoin. With Bitcoin, it isn't something that I'm heavily taking any notice with at the moment. Bitcoin's Bitcoin. It isn't something that I'm sort of interested in. Don't get me wrong, I do have my shit coins and I do have quite a few altcoins that I am involved with, but Bitcoin itself, I mean, I know when Bitcoin moves. I know when it's done a drastic move, everybody's talking about it. It's at the top of everyone's list, radar at the moment, but mine. So yeah, there's no actual reason behind that, and it's not because I don't believe that I don't think Bitcoin's like such a trash cryptocurrency. I mean, look at it. It reached 65k this year. So, sorry, 64.5k. So, I mean, it is, like I said, it isn't something that I'm sort of heavily involved in. I mean, it's absolutely slumped and it probably will continue to do so. However, like I said, it isn't something that I'm sort of getting involved in. I mean, look, you can see prices virtually it's lost virtually almost all of its profits from this whole year. So yeah, Bitcoin's one of those things, comes in waves, isn't something that I'm highly worried about. It is still high, and yeah, I don't think it's going to come drastically lower. It probably will just sort of retrace and come back higher at some point. So yeah, not many ideas on Bitcoin at all. Isn't something that I'm sort of interested in or follow. So yeah, that's it really.
Hi, Niamh. How are you doing?
Hey, I'm good. How are you? You okay?
I'm good. Yeah, I was sitting in the other room. This is really embarrassing, but I found out that I blocked myself on the A1 Trading YouTube channel. I blocked my profile, like Trader Nick. completely by accident because I thought it was a spam account because there's so many like fake accounts out there.
Okay, yeah.
And so now I don't know how to do that. So I was actually sending messages. I was like, hey, welcome back, Niamh. And I was like, man, she must be ignoring me. And I look and I was like, did I really block my own account?
Wow.
So having a little mental breakdown in the other room, but
don't worry about it. It happens. But yeah, I was literally just wrapping up, asking if anybody's got any questions or anything like that. But yeah, just went through what was on the watch list today, why I didn't trade, and why it's so important to sort of stick with your plan. And I went through a little bit of backtesting spreadsheets as well. So yeah, that was it really.
I saw that and I liked it a lot. And I was going to say your note about not trading sometimes is like a really, really important lesson. I think that more people should take seriously. Like, yes, it sounds boring. Yes, you're like on the sidelines. You're like not making or losing anything. But sometimes that's really okay because sometimes like not losing anything is the priority for being a trader in general. So very, very good points, and appreciated your breakdowns and some of the trade setups and ideas that you were looking at in the past as well. I was saying also it's kind of cool because like when I do my streams, I'm sort of like in the now talking about trade setups that I'm doing, but it's really cool to see somebody come on and talk about like in hindsight, or not hindsight, but in the past, like explaining a trade fully. And so I thought that was really cool.
Thank you. Oh, well, thank you so much for having me on again. Appreciate that. But yeah, literally just to hop on. If anyone's got any questions or queries, give me a shout on Instagram and we'll go from there.
Absolutely. So I'm going to do this. I'm just put it in the chat, you guys. I'm going to pop it up on the screen. Go give Niamh a follow on Instagram. She definitely deserves it. She posts some great content, some great one-liners that'll really change your day every day. So check those out. Again, give her a follow on Instagram, Niamh Forex. And thank you so much for coming on the show.
Not a problem. That's absolutely fine. Well, thank you so much for having me.
All right, guys. Well, we'll get some thank you Niamhs in the chat. And I guess we'll see you next time.
Bye-bye, guys.
All right. Guys, another great show with another great guest, of course. Thank you very much again to Niamh for showing up. And thanks for you guys for hanging out and asking some good questions and tuning in. Saw we had some variety in the chat of different new people and some old people. So good to have everybody back here. So thanks so much for being on the stream. And we will see you guys back tomorrow. We got more content coming. Do we have an outro today? I think we don't have an outro yet. Maybe in the future we'll have an outro for you. But until next time, you guys will have to watch as the stream slowly gets better. Have a great rest of the day, guys. And